Hello traders, this is Blake Morrow with ForexAnalytix. I want to welcome you to the week ahead video for July 8th, 2018. I hope you guys and gals are having a great weekend. Before I get into what might end up being kind of a busy week for the markets, I just wanted to say if you haven't signed up for ForexAnalytix, make sure you do so today. It's only $1 for 10 days. Once you sign up, make sure you download the mobile application, the tablet applications. You can get them in the App Store, the Google Play Store, and this way you can have all of the analysis and updates right at your fingertips. The alerts coming out and push notifications right to your mobile device as you're on the go. So it's a great feature to have, especially with the mobile devices. All right. Let's talk about this next week. So this next week, we're still dealing with the World Cup and some great games over the weekend. Some better games are going to be happening this next week. A lot of the big players are out, so it's going to be and congratulations to those of you in the UK. England looks phenomenal, and I every World Cup, this is pretty much the only time that I personally watch soccer. Oh, did I say it? I did call it soccer. I meant football. Anyway, yeah, it's about the only time that I really pay real close attention to what's happening, and it's fun. It's been nothing short of exciting. So anyway, enough about that. Let's talk about what's going to be happening in the markets this next week. The big event for the week is going to be the Bank of Canada interest rate decision, which that happens on Wednesday. And I will take an in-depth look at the Canadian currency and the US dollar Canadian in particular. We're gonna look at the US dollar Canadian and look at other Canadian pairs that typically we don't cover here at ForexAnalytix. We cover a lot of different cross rates, like for example, like the Euro New Zealand and the Pound Aussie. You can see them right here, but we don't cover all the Canadian pairs, so I actually want to go through them really quick for you, because the Bank of Canada is obviously happening this weekend. Now, or this week, excuse me. There are some pretty key developments as far as I'm concerned with the technicals as far as the market goes, and a lot of them have to do with dollar weakness. We're seeing some dollar weakness come into the market. We've got the euro dollar that's pushing some trend line resistance. We just broke the 117.20 level, which was a big level from a couple weeks back. If you guys recall, I was looking for a 618 retracement rejection of this move from the about 118.40 down to 115.10. The 618 came in at 117.20, 25. We broke above it on Friday. So the euro dollar actually looks fairly well bid. The dollar looks a little weaker. You can see the divergent relative strength. We're pushing some trendline resistance, and frankly, it looks like the euro dollar is going to at least make a stab for 118.50 again. All right, which is a big, as you can see, a big resistance zone in the pair. So the dollar is a little weaker, and it's not just the euro. Let's take a look at the cable. If you look at the pound, and that's a weekly chart. Let's go over to the daily. We have a descending wedge, and if you guys are ForexAnalytix subscribers, you already know there's a pattern in play with the descending wedge that targets the 136 level, or basically close to the 200-day moving average, which comes in around 135, 70, 80, depending on how quickly we get up to the 200-day moving average. It is up in that neighborhood, and there's a lot of congestion area around here. You can see from back in mid-May. So the pound is still marred by Brexit news. There's been a lot of there was actually an announcement late Friday as the market was closing that really pushed the pound towards highs, and we closed near the 133 level, and frankly the pound looks like it's going to rally. If you take a look at the Aussie dollar, okay, the Aussie dollar has actually firmed up quite a bit, and despite all the trade war rhetoric, the trade dispute, whatever you want to call it, the Aussie has come off the 127% extension. Now, 127% extension, divergent relative strength, and that is from that move that we saw in December. So December to January, this move out of nowhere. I remember around Christmas time, around the Christmas holiday, watching the Aussie dollar and thinking, man, you know, there wasn't any liquidity. The Aussie was just grinding higher, and I couldn't figure out why, but it was just lack of liquidity, probably end of year flows. The Aussie was ripping out of nowhere, and then all of a sudden, you know, mid-February it rolled over, and we just hit the 127% extension this last week. So, or actually over the last 2 weeks. Divergent relative strength. Now the Aussie is firming up again, and really above 74.50 could allow for the Aussie to squeeze even further. Again, this is all playing into dollar weakness right now. We have the Aussie dollar strengthening, the euro, the pound, and even take a look at the Kiwi. The beleaguered, beat up Kiwi that has just, you know, given us all sorts of, you know, bearish signs. The Kiwi is actually did a false breakdown and is rallying higher. And matter of fact, let me take you over to the Kiwi dollar. I want to show you something else with the Kiwi. We have this long-term trend line. Let me get rid of all these fib levels. It's a little messy here. So we have this long-term trend line through the Kiwi dollar, and this is following the financial crisis. That was the big move post the GFC, or the Great Financial Crisis, as it's better known as. We had this false breakdown, and then we reversed. And so this probably caught a lot of traders off guard, stopping out a lot of people as we broke through that trend line. We have this inverted head and shoulder pattern. It actually points to 69 cents. So, you know, the Kiwi still looks like it's going to recover. So again, I'm pointing out dollar weakness coming through the market, and it's pretty apparent. Now, one of the currency pairs that's actually held up relatively well, and I have to say it's held up really well considering what we've seen in the bond market, is the dollar yen. We have the dollar yen that's sitting below this big trend line that comes in around 111. We're staying above the 200-day moving average, but I think a lot of that has to do with risk appetite. Stocks are still very resilient. Stocks haven't pulled back despite this trade war or trade dispute heating up. Well, we could call it a trade war now, I guess, with all the, you know, all the tariffs that are being imposed on both sides of the borders. You know, the dollar yen's held up very well. Bond yields have dropped. The dollar yen is still held up. I do expect it to eventually break below the 200-day moving average, below the 110 level, or 110.15. That's where the 200-day moving average is, 110.13 as it marked up on Friday, but it's right around here. I do expect it to come under pressure as the dollar is feeling some pressure across the board. Now, talking about next week, we do have the Bank of Canada, okay, and I wanted to actually take you over to what how I've been viewing the dollar Canadian as of late. So let's start off with expectations. First of all, July, which actually on Wednesday is going to be July 11th, the market is expecting the Bank of Canada to raise rates. So I think we can firmly say that it's priced in the market. The dollar Canadian has dropped, the Canadian has firmed, and everybody is expecting the Bank of Canada to raise rates. Now, if the Bank of Canada has a slightly dovish slant at the meeting, that's probably going to allow the dollar Canadian to actually bounce, or the Canadian currency to weaken as of Wednesday. Now, technically, let's talk about it technically. I need to come back to this daily chart, but let's go over to the weekly chart here. Let's not forget that the dollar Canadian is firmly above a multi-year trend line spawning all the way back to 2015, or end of beginning of 2016, you can say. All right, this weekly, we broke out. Personally, I played it to the long side as we broke through 131, 130.50 actually. I traded it up until about 133. It was a really probably made my month last month. It's really the trade that put me in a nice profitable position in the last month. Now this month I did expect a pullback. We got a double top. and frankly, we're pulling back to levels that I had expected. Now the question is, are we going to stop at this 130.50 level? Now this 130.50 level, it's pretty key. As you can see, I actually have an alarm set. It is a breakout point. It was a big wedge breakout point right here. You can see this massive resistance coming through here around 130.50, 130.60. We have this huge trend line coming into play, and also a 78% retracement. So I am expecting the dollar Canadian to come under a little bit of pressure, but I do believe we're going to find support somewhere in this neighborhood between, and I'm gonna adjust my drawings here, between 130.50, maybe all the way down to 130, maybe. But I do expect us to find some support down here, and frankly, if we can find some support ahead of Wednesday, then I'm looking to be long. Because if let's play this out in our heads. If it continues to come under pressure Monday, Tuesday, we start to get a bounce where, ahead of the Bank of Canada, traders start to, reevaluate their positions. They want to flatten some shorts ahead of the Bank of Canada, which would make sense. Trim some dollar Canadian short positions. They're probably going to do so around this 130, 130.50 level. So if we can buy it down here, and it does bounce back to 131 ahead of the Bank of Canada meeting on Wednesday, then you've got a little bit of cushion or profit potential, or profit ahead of the Bank of Canada. And then if the statement is dovish, okay, if the press conference is more dovish than hawkish, because still concerning trade wars or NAFTA negotiations, the dollar Canadian may bounce following the Bank of Canada on Wednesday, which if we're trading at 131, we might be back at 132, 132.50 by the end of the week next week. So I am looking to buy this dip, basically, is what I'm saying. Now, you can look at other currencies, like let's take a look at the Euro Canadian really quick. The Euro Canadian I haven't marked up a whole lot, but the Euro Canadian's a little messy, and frankly, if the Euro is going to continue to firm, the Euro Canadian, we're making longer term higher lows. All right, so it wouldn't surprise me at all if the Euro Canadian pushes back up towards 158. You can look at the Pound Canadian. Okay. Pound Canadian as well, as we've pulled back to the 200-day moving average, and we found support down there. So it wouldn't surprise me at all to see us back at 176, 178, or maybe even 180 as we develop some sort of, maybe like a bat or a Gartley pattern or something like this. I could very easily see that happening in the Pound Canadian, especially with the cable as big as it is. So when you look at some of these cross rates, and here's the Canadian yen. Let's say we're expecting some Canadian weakness. Okay, I wouldn't be surprised to see the Canadian yen eventually roll over as we're capped by this trend line. So, in my opinion, if you look at the dollar Canadian, I think is set up really well for a potential, resumption of this longer term trend higher. It's had a nice pullback. Matter of fact, let me do one last thing while we're here. If you take this low to the high, the 38% retracement also comes in at 130.50. So this 130.50 may offer some really great risk reward for being long counter trend, or it's resumption of the longer term trend, but counter trend of the last 2 weeks. I think it may present a great opportunity in the Canadian pairs. Okay, enough about the Bank of Canada. So let's just talk about a few other things that are happening this week. So on Monday, if you guys have any Euro exposure, keep in mind President Draghi, ECB President Draghi, he is testifying before Parliament, I believe, he's going to be testifying before the European Parliament about Economic and Monetary Affairs Committee in Brussels. So that could be a market mover. That's going to be first thing on Monday morning, as those of us in North America are getting in front of our computers. We have UK GDP, so the cable may see some volatility on Tuesday because of the GDP, also manufacturing production numbers, and goods trade balance are being released early Tuesday morning. Again, we have the Bank of Canada on Wednesday, as you guys know. We have also on Wednesday morning, we have PPI here in the US. All right, so we have inflation data actually coming out this week, because on Thursday in the US we have CPI, which is going to be very important. Now, one of the other things that happens on Thursday morning, or Thursday afternoon if you're in Europe, is the ECB monetary policy meeting minutes. Now, the meeting minutes have been moving the euro as of late. Now, the ECB monetary policy meeting minutes really have been more of a data release that the market's been paying attention to really over the course of this year. So on Thursday morning, be advised that that is coming out pretty early in the morning before the US equity markets open, which could move the markets as well. And last but not least, before I wrap up here, one of the things I wanted to bring up also is gold and silver. Both stopped at some pretty key levels this last week. Let's take a look at gold first and foremost. So gold found some support right on, and this trend line actually spawns all the way through. Okay, in cash gold, right at this support. And we also hit that 1240 key support in gold. So gold, it is pretty oversold. We could see some continued bounce here in gold, which I think plays well into the weak dollar story that we've been discussing with the euro, the pound, the Aussie, the Kiwi, and potentially the yen. Let's take a look at silver. Silver also found some support here in this big long-term triangle. We came through the bottom, the lower trend line, found support around the support zone. And if you go over to the daily chart, if all we have to do is get above 1620 in the silver market, and the silver market could really show a bounce. And I know it's hard to see on this particular chart, and actually I can show you on a more intraday chart here. Take a look at the 4 hour of silver. Oops, here we go. We have this little inverted head and shoulder pattern. So if we get above 1620, that could squeeze us back towards 1650. Again, I'm trying to validate potential dollar weakness that we might see in other markets, which could feed into silver strength and gold strength at the same time. All right, guys and gals, if you love this video or you liked it, you think it's going to help you this next week, make sure you click the thumbs up button on YouTube. That always makes me feel better. It makes our team feel better that we're pushing out this free analysis for you, and you're benefiting from it. So please click the thumbs up button, and also hit that bell notification if you're on YouTube. That will alert you on your desktop when we have new content that we release. Like, for example, Forex Live's CEO or founder, not founder, but CEO Adam Button was on our FACE webinar. It was a 30-minute interview. We published that on our YouTube channel, and if you missed it and you want to go back and listen, you'll be notified when those are released. That was a really great interview, by the way, with Dale and Adam. So go back and listen to that one as well. And yeah, click the like and subscribe, and tell all your friends and family about us and what we do. It'd be great. And if you guys are not ForexAnalytix subscribers, make sure you try us out today. Thanks a lot. My name is Blake Morrow with ForexAnalytix. Have a great rest of your weekend.